Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. U.S. futures rally and the dollar weakens on a Bloomberg scoop that the Trump team is looking at a slow and steady approach to tariff hikes rather than going all out on day one. President-elect Donald Trump says a Gaza ceasefire deal could conclude before his inauguration next Monday. And as the clock ticks towards a TikTok ban in America, Chinese officials are said to be looking at Elon Musk as a potential buyer of the app's U.S. operations. Well, it has just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai, taking a look at the markets and the market reaction to that Bloomberg scoop that the Trump administration is considering a slower unveiling of these tariffs, so a gradual increase of tariffs as opposed to all out on day one. The impact has been positive for equities, so what we're getting is a positive handover from S&P during the session, and also Wall Street close yesterday leaning on the green, today up 0.2% futures, but then the dollar also slipping a little bit today, down 0.2%. So this is the first day of declines in 6 days. So the dollar is seeing a bit of a breather this morning on that report. Brent also hovering around $80. We spoke about some of the drivers yesterday, but we are sitting at a 5-month high now for the energy complex on, again, the anticipation that these new Biden administration sanctions could cause some disruption in the energy space and also some short positioning, I should say, as well. Today, leaning towards the red, down 0.4%. And then Bitcoin, I don't usually bring this one up, but yesterday the Bitcoin complex was down 5% in trading, still trading at around $95,000. Worth mentioning that before the elections, Bitcoin was trading at around $70,000. So we're still significantly higher versus pre-elections, but still some downward pressure has come through as we look at the pullback in U.S. equities as well. Speaking of, let's turn the terminal chart today. And here I just want to point out that pretty interesting that the correlation has been positive between stocks and bonds. They've been moving in tandem. So what we've had since the beginning of the year is that stocks have moved lower and bond yields have moved higher. And this is typically what you would not expect to see, because in an environment of risk off, you would expect money to be pouring into bonds. That hasn't occurred. So interesting stat to point out there. All right, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. And what are you watching out for today, Avril?
Well, Jumana, it's really about that report that the Trump team is considering a gradual approach to enacting tariffs. And this is, I think, raising optimism that, there will be a mitigated impact on the inflationary picture. Maybe the Fed has more room to ease interest rates. So that's playing out in some market sentiment on stocks. We're seeing a slight rebound in Asia. China is leading the way. The Nikkei is playing catch down as it's back from holiday in Japan, but the story really that we're seeing in terms of the rebound is in Asia Pacific bonds and currencies. It is a little bit difficult to kind of dissect what we're seeing on the Chinese stock markets today. The CSI 300 did bounce as much as 2% earlier, but this might also be just because of a recent string of losses. The valuations looking attractive, and also we have a joint briefing by securities regulators and the PBOC today. So there's some optimism that they could give details of a potential stabilization fund, so that might be driving things as well. But overall, a pretty positive day for markets in this part of the world. Jumana.
Yeah, certainly appears to be the case, taking a look at U.S. futures too. Avril Hong in Singapore. Well, on to politics news now. A U.S. President-elect Donald Trump says he believes negotiators could conclude a Gaza ceasefire deal before his inauguration next Monday. Israeli officials say the first phase of the deal would see Hamas release 33 hostages, including the remains of those who have died in captivity. U.S. National Security Advisor Jake Sullivan told Bloomberg he's also optimistic.
I think the pressure is building for Hamas to come to yes. I think Israel also has achieved a huge amount of its military objectives in Gaza, and therefore they are in a position to be able to say yes. So there is a distinct possibility that we can get this deal done this week.
Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia, joins us now. The mood music is certainly quite positive. It feels quite likely that some form of a deal, at least the contours of the deal, are going to be announced. What do we know?
Yeah, I mean, we've been here a few times before, so I think everyone's being very cautious. And I know Jake Sullivan, for one, came out and said, look, we have been here multiple times before, so there is that caution. Having said that, it does appear, at least on the face of it, like all the parties are keen to try and get something done before Jan 20th. I think the devil will be in the detail in terms of how this unfolds, and at the moment it feels like it's following sort of the classic structure, which is a series of days over which a number of hostages and then prisoners are released. There is a withdrawal of troops, and then there's another segment where, you know, they go a little bit further and so on and so forth. I think the real challenge here will be the following, which is Hamas really in control of all the hostages? Does it know where they all are? There is a real question mark over that. Number two, can Bibi within Israel get consensus within his government to back this deal? And certainly the noises coming from the more extreme end of what is historically a fairly extreme government anyway seem to be adamantly against it. And that may cause him some domestic issues. You know, can he cling on to power in a scenario where, you know, some of the more extreme elements of his government decide they're not going to go for it?
Yeah, referring to some of the comments by the finance minister yesterday. Saw those. Stuart, why has there been such, I don't want to say rush, because you know, these talks have been going on for a while now, but why do they want to get this done before Trump steps into office on the 20th?
I think it's the unknown unknowns. So, I mean, we know that Trump has threatened, and this is not a direct quote, but it's along the lines of unleash hell unless he gets a deal by his inauguration. The reality on the ground, though, is that Gaza's been pounded now for, 16 months? Yeah. There's not much of it left. What exactly is he going to do that's going to make that worse? So in practical terms, it's very hard to see. Nonetheless, all the parties seem to be seizing on this opportunity as a good focus, right? It gives them a deadline to work towards. And it does feel like everyone wants to get some sort of deal. Including
Trump himself, which is interesting. He wants to get it done before he even steps into office. He probably just doesn't want to have to deal with it once he's in.
I think that's exactly right.
Yeah. All right, Stuart, thank you for the analysis. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Well, Lebanese diplomat Nawaf Salam has been named the country's prime minister. The former United Nations envoy and current head of the International Court of Justice will face the task of forming a new government and implementing reforms. Salam's election is seen as a further shift towards the West and away from Iran's influence. Let's now bring in Nasser Saidi, founder and president of Nasser Saidi and Associates, and Lebanon's former Minister of Economy and Trade. Great to have you with us on the show this morning. A lot of developments going on in Lebanon with the appointment of a new president, a new prime minister yesterday, with a bit of a nudge, a bit of a push from the West. Let me just start off by asking you how you feel about these two new appointments.
Look, it's difficult to exaggerate, but this could be a historical moment of opportunity. Probably the closest I can think of is the Tariff Accord back in 1989, which really signaled the end of Lebanon's civil war. We've had a tremendous change in the regional landscape, right? Whether it's with respect to Palestine, Gaza, Hamas, Hezbollah in Lebanon, the change in Syria, the end of the Bashar regime. So what you're talking about is regional change in the landscape, but also now the internal landscape in Lebanon radically changed. And you're right to point that there's been help, but increasingly also the help, nudging of the Lebanese and putting pressure on them has also come from the Gulf and mainly Saudi Arabia. And remember, Saudi Arabia was the main country, the power broker behind the Tariff Accord. So what we have now is the possibility of a new mandate with a new president and Nawaf Salam, who is a diplomat, seasoned diplomat, judge of the ICC, also an academic. That combination, I think, means that you could have a new Lebanon emerge. And that's why, for once in a long time, I'm optimistic. You need severe reforms, fundamental reforms across the board. They're economic and financial, remember.
So I think that optimism is shared by many Lebanese people today. It certainly does feel like the beginning of a new dawn. But again, the ask is very high. You speak about some of the economic reforms that are required. What do you think should be some of the first-day priorities of this new government?
I think you need to deal with the security situation to begin with. There's a ceasefire with Israel. That has to become a permanent ceasefire. So you need security in the south and across Lebanon. I think that's one. Number two, I think you need to deal with the humanitarian situation. There are still refugees and people displaced in Lebanon. Then, as you point out in the slide over there, you're going to have reforms to have an IMF package. The last time we had an IMF package was in 2022. The economic and financial landscape has changed since then, so we're going to have to put in place reforms to have a new IMF package, but also need to think about where are you going to get the funding for reconstruction. The cost of reconstruction is running around 25 billion, in my view. Then you've got to think about judicial reforms, which is what the president has called for. You need to think of state institutions being reformed and better governance. You have to have an anti-corruption judge drive.
Yeah.
So all that is a combination of what is required. Basically, you're going to have to rebuild Lebanon.
Let me ask you about the price action in Eurobonds. The bonds not so long ago were trading sub 10 cents on the dollar. At one point, we were trading at around 6 cents on the dollar, now trading close to around 16 cents on the dollar. This started once the ceasefire was agreed to and has only continued with the new administration being formed. What needs to be done for us to continue to see a rally in Eurobonds, do you think?
Well, you need a combination of fiscal reforms. You need to restructure the external debt. Bondholders are hopeful and optimistic that you're going to get these reforms taking place within a short period of time. You've also got to change monetary policy. The central bank had been pursuing a policy of fixing the exchange rate for a very long time. That led to a big financial and banking crisis. That needs to change. So you need to undertake these monetary, fiscal reforms and public debt restructuring in order to sustain the optimism in the bond market. Remember that Lebanon is on the gray FATF list. So you're going to have to restore confidence. And the restoration of confidence means that you're going to have sustainable fiscal policies, banking and monetary policies. You need to restructure the banking sector in particular. People are not aware, maybe outside, that people have not had access to their deposits. So you had a deep banking and monetary policy and exchange rate policy crisis. It's a poly crisis. So you're going to have to appoint a new team at the central bank. The current team ends in June 2025. So a lot on the agenda. And I think what's going to be very important is who are we going to nominate as Minister of Finance? Are they going to be able to undertake the reforms that are required? So cautious optimism. As I said, this is a historical opportunity.
Yeah, and that's a good place to leave it. Nasser Saidi, thank you so much for coming on our show today. Founder and president of Nasser Saidi and Associates and Lebanon's former Minister of Economy and Trade. Now, Southern California faces another round of dangerous fire weather, even as crews struggle to contain wind-driven blazes that have paralyzed Los Angeles for nearly a week and killed at least 24 people. The disaster is expected to be amongst the costliest in U.S. history, with estimated damages and losses between $250 billion and $275 billion. And coming up, Trump's economic team is said to be discussing a gradual approach to tariffs to boost negotiating leverage and avoid inflation. Details are next. This is Bloomberg. Bloomberg has learned that Donald Trump's economic team is discussing a gradual approach to tariffs to boost negotiating leverage and avoid a spike in inflation. For more, let's bring in Bloomberg News editor John Harney. John, good to have you with us. Interesting scoop from Bloomberg with this possible proposal to introduce tariffs gradually. What do we know about what could be on the table in terms of how the Trump administration is actually going to implement tariff policy?
Well, this report by Jenny Leonard and Saleha Motion indicates a bit of nuance in this approach to tariffs, which was a huge, enormous part of Trump's campaign for the White House, and has been part of his policy going back into his first administration. This proposal, which I should say, has apparently not been approved and perhaps not even fully not been seen by Mr. Trump himself, would call for raising the tariffs gradually over a period of time, and there'd be two purposes for that. One, to see how effective they are, and two, to gauge any inflation that might result, which has been, of course, the source of market jitters ever since, really, since the election.
Yeah. One of our colleagues was speaking to UBS global economist Aaron Kaptein earlier, and he was saying that it's probably going to make the Fed's job a little bit more difficult navigating these subsequent increases in tariffs. So that's something to think about from the Fed's perspective. But who do we know about, what do we know about who exactly has been working on this proposal? Because we haven't heard from President-elect Trump himself.
We have not, that's true. Scott Bessent, the incoming treasurer, or the nominated treasurer, who's been nominated as Mr. Trump's Treasury Secretary, and Kevin Hassett, will be a top economic advisor in the new administration. This plan would call for, like I said, a gradual approach, but. It was interesting. In the interview, the man you interviewed, the UBS interview, he said that this was a bad idea, and that rolling tariffs would cause even more uncertainty and perhaps a greater risk of inflation.
Yeah. Yeah, and that is the real issue there. And that's something that President-elect Trump does not want to see, so it could backfire. Bloomberg News editor John Harney, thank you so much. Well, coming up, we discuss market strategy and asset allocation with Emirates NBD, talking about this potential tariff proposal and more. This is Bloomberg. Asian stocks and U.S. futures rallied while the dollar weakened after Bloomberg revealed the Trump team is said to be discussing a gradual approach to ramping up tariffs to avoid an inflation spike. Let's bring in Anita, Krishna, Gupta, equity strategy at Emirates NBD. Good to have you with us on the show. Happy New Year. The news gods have been very busy in the first couple of weeks of the year, but let me just ask you about this Bloomberg scoop that we've been talking about on the show earlier today, and the fact that the Trump administration is considering gradually applying tariffs, not doing it all on day one, but sort of introducing a little bit and then waiting and then introducing a little bit more. What do you think of this sort of phased-in approach of applying tariffs? How do you think the markets will take it?
Good morning, Jumana. Happy New Year. We've had a kind of lukewarm start to the year. We have had global equities down about 1%.
Yeah.
We have had the U.S. down a little bit more than that. So when we are hearing about tariffs is definitely a worry, not only for China, Brazil, Mexico, but also for U.S. corporations for whom the cost of goods goes up. So we've needed a little bit of good news. So besides a little bit of geopolitical de-escalation this morning around Israel, we're also now seeing this tariff talk, which is more moderate. Now, this is something which we had also thought of last year. We had felt that a 10% tariff implementation and increase in tariffs is what would be the norm. And it's not that President Trump is going to come in with, everything on day one, first of all. And secondly, it is going to be moderate because he's going to watch the economy too.
Yeah. We are heading into earnings season, and I wonder whether that could actually give a leg to equities on the up, because equities have been struggling the first couple of weeks of the year. But looking at some analyst forecasts, the expectation is still 8% year-on-year EPS growth. That's still pretty healthy and certainly stands out versus other equity markets. So what are you looking for specifically in this earnings season? And do you think micro could trump macro?
It's a combination, of course, of the fact that you've got CPI numbers coming out on Wednesday. Yeah. That's going to be watched closely. The Fed's already indicated that they're not going to be cutting rates quite so much in a hurry. We've got a bit of, unemployment numbers have been falling. So you've got all that being fed into equity markets. But I do think the single biggest catalyst at this point is the earnings season, anywhere between 8 to 10% EPS growth. Now, this is 3 years of strong EPS growth. 2024, expectations for 2025 and 2026. And of course, some sectors stand out, but it's not only EPS growth. We're also looking at revenue at around between a 4.5 to 4.7 growth rate reflects that margins are also very strong.
And do you still expect the higher earnings growth to be showing up in this Magnificent Seven basket? Because again, one of the features of the stock rally last year was just how narrow it was, and it was just a handful of stocks leading the gains.
So the Mag 7 is about 34% of the S&P 500, but it's only about 22% of earnings. But the earnings growth of the Mag 7 was thrice that. It was over 30% last year on year. This year, it's somewhere around 26 to 27% earnings growth. That's still way above what we are expecting for the S&P 500, around 12%. So, yes, the Mag 7 will continue to lead returns, albeit with some volatility, because every little move of theirs, every little data point, whether it is chip supply from NVIDIA, whether it is how Apple's iPhone 16 is implementing AI, every data point is going to be watched on the Mag 7.
Do you think the S&P will be higher by the end of 2025?
Absolutely. So we expect about a 10% gain on the S&P 500, driven completely by earnings.
Okay, interesting. Final quick question for you. Dollar, some of the rally seems to be petering out just today, actually. What's your view for the dollar the year ahead?
So last year, the dollar strengthened by about 10%. This year, it looks like the dollar has already started with a strengthening cycle. I think everything is going to depend upon the U.S. economy and also on tariffs. Already for the first time today, we're actually seeing a little flattening of the dollar. Yeah. So I think, and stronger dollar is not great for stocks.
Yeah, well, and also positioning is very stretched, so that's something to bear in mind as well. Anita, always a pleasure to chat to you. Thank you so much for coming on our show. Anita, Krishna, Gupta, equity strategy at Emirates NBD. And coming up, we are going to be talking about TikTok. Chinese officials are said to be discussing the sale of TikTok to Elon Musk. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. U.S. futures rally and the dollar weakens on a Bloomberg scoop that the Trump team is looking at a slow and steady approach to tariff hikes rather than going all out on day one. President-elect Donald Trump says a Gaza ceasefire deal could conclude before his inauguration next Monday. And as the clock ticks towards a TikTok ban in America, Chinese officials are said to be looking at Elon Musk as a potential buyer of the app's U.S. operations. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, the big Bloomberg scoop this morning is news that the Trump administration is considering a slow and steady approach to the tariff implementation. What that has meant is it's given a bit of life to some of these Asian markets, Asian equities. The handover has been positive. S&P futures up 0.3% this morning, building on some of the minor gains that we saw in yesterday's session, albeit after quite a torrid week last week, the S&P index pulling back around 2%. But this morning, we're also seeing some pressure on the USD. Strange. This is the first time the dollar is red in the last 6 days. The dollar as well has been inching higher and higher as we've been covering on the show. But again, this news about the gradual implementation of tariffs seems to be putting some pressure on the dollar here. Brent also just above $80. So we are slightly softer this morning, down 0.4%, but still a massive climb upwards in the last week. The energy complex is up more than 6%. We're going to be talking about that with that guest shortly, so I'll get to that in a moment. And then Bitcoin also in focus today, sitting at around $95,000. Today we were down about 5%. And this is really just showcasing the fact that Bitcoin is recently having quite a high correlation with what stock markets are doing. So something to bear in mind there. Switching over, I also just want to draw your attention to something that our colleagues in Europe have been watching very closely, and that is the trend lower for the euro. And this is quite an interesting chart, because if you go all the way back to, say, 2008, 2009, what you'll see is the trend has been a downward trend for the better part of the last 15 years or so. Euro USD is marching towards parity, now sitting at around 102.50, but getting closer and closer to those parity levels as we talk about some of the struggles and headwinds facing the European economy and the strength of the USD. All right, let's also check in on Asian currencies as well. Avril Hong is in our Singapore studio. I was just showcasing some of the strength in the USD and how it's impacting the euro, but what are we seeing on the boards this morning, Avril?
Yeah, I mean, we've really seen the dollar strength for much of this year already, showing no signs of abating. So as that takes a bit of a breather today, that's proving to be reprieve for the likes of China's renminbi. We also saw sharp spikes in the Kiwi, the Aussie dollar. But there's also a sense that this is a dynamic that markets will have to get used to, those knee-jerk reactions under a Trump administration. Our MLive strategists have also flagged that when it comes to the Kiwi, the Aussie dollar, you also get the sense that this foreshadows what's to come under a Trump administration, potentially influencing monetary policy for central banks far, far away beyond the Federal Reserve. As you know, the RBNZ, the RBA, they are seen by markets as substantially cutting their rates in the year ahead. So does Trump complicate the picture for them? Focusing on what we're seeing in the Japanese yen as well, today we were watching out for a briefing from the BOJ Deputy Governor Himino. Ultimately, he reiterated stuff that the Governor Ueda said last month, and while he's reiterating how they will be discussing a rate hike later in the month, there's a big difference between discussion and actually pulling the trigger on an increase in rates. So we're seeing a bit of an outlier. The yen is weaker today. Jumana.
A little less conversation, a little more action out of the Bank of Japan. Thank you, Avril Hong in Singapore. All right, let's talk about the energy complex now. Oil is hovering near a 5-month high after rallying on global supply risks. That is after the U.S. imposed stricter sanctions against Russian flows and as investors weigh potential trade tariffs from the incoming Trump administration. Brent crude has surged more than 5% over the previous 2 sessions alone. So for more on the global oil outlook, we're joined by Sara Vakhshouri, president and founder of SVB Energy International. Sara, let me just start off by asking about the big news from Friday, which is that the Biden administration is introducing these sweeping sanctions across these Russian entities, from tankers to producers to exporters. The market reaction suggests that this time around, these sanctions may actually cause some supply disruption.
It's very interesting because last year we discussed a lot the fact that narratives in the market are changing. And last year we had a bearish narrative to the extent that everybody was expecting a very quiet market and low demand oversupply in 2025. And we saw that in December, OPEC Plus had extended its easing of its volunteer cuts, at least some of it to end in April, which kind of passing the first quarter, and some of them to end of 2026. Now the card has flipped. Obviously, the sanctions have announced by President Biden days before he leave the White House. I would say, again, as of now, we can't be sure because the administration we are leaving, and the office, and we are not sure exactly how they're going to be implemented. And as of now, we can see that some of those Russian tankers are testing the port. So again, this could change at any time. But definitely, if they are fully implemented, they're going to have impacts on the market.
Yeah. Well, all markets are going to be quite sensitive to the policy announcements from the Trump administration. And I just wonder whether the oil market specifically is going to be sensitive to the measures the Trump administration may take on sanctions, be they Russian sanctions, sanctions on Iran, sanctions on Venezuela. Is that a possibility that the oil market is anticipating?
Yes, because many experts in the market are also talking about that. So definitely market is expecting the tightening of sanctions. But again, like just this morning, the discussion on how the tariffs are going to be implemented, definitely not immediate, they're going to be gradual to be measured, which is going to have impact on demand. Going on supply, definitely we have to wait and see how it's going to impact the market. What are the priorities? Definitely this time, President Trump has different priorities. We see in his energy team, he has announced a National Energy Council in the White House. We have tech companies, Elon Musk, that are supporting, big supporter of President Trump in the United States, data centers, AI, we need a lot of electricity. So a lot of priorities have been changed. And having these massive sanctions quickly on all these countries you mentioned, particularly Russia, it's going to have a huge impact on the market and prices, even within the United States. So we shall wait and see what would be the president's decision in terms of implementation.
Yeah. Sara, another geopolitical question for you. This one to do with Saudi Arabia. My colleague Javier Blas in Bloomberg Opinion put out an article yesterday, very interesting one, where he compiled data showing that U.S. imports of Saudi crude have plunged to their lowest level in almost 40 years, in a sense that the U.S. is becoming more and more energy independent. What does that mean for Saudi Arabia's role at influencing these global oil markets? And do you see them as having an increasingly less influential role in the coming years, given the more dominant position that the U.S. has had now?
No, I don't see that as a relevant argument, because Saudi Arabia is still maintaining its market share. So that oil is going to go somewhere else. Yes, definitely, U.S. is importing less oil from Gulf countries and Saudi Arabia particularly, but that oil is going somewhere. Definitely a lot of the oil from this region is going now to Europe because of the change of flow of because of Russian sanctions. Some of it is still going a lot to China and India. So I would say that Saudi Arabia still has an important role when it comes to geopolitics. And China and just different customers, different regions. But also, if you're specifically talking about U.S.-Saudi, U.S. relations in terms of investment and trade, has been historically been there, and it's just evolving. There are a lot of relations between the two countries. So I wouldn't see that Saudi's influence, especially the influence Saudi has as a major producer of oil, but also all the developments they had in renewables. Saudi is producing lowest cost electricity, not just from fossil fuel, but also renewables. All the expansion of their energy system outside of fossil fuels. So I wouldn't see Saudi's role reducing. In fact, if you just yesterday, Saudi energy minister announced that Saudi is going to be going to play a major role in terms of nuclear fuel process for electricity
well, I'm
production.
actually heading over to the I'm heading over to the Abu Dhabi Sustainability Week conference later today, and we're actually going to be talking about nuclear energy. So there you go. Thank you for the segue. Sara, thank you very much for coming on our show today. Hopefully next time we can do it in Dubai. Sara Vakhshouri, SVP Energy International President and Founder. Now for a look at some of the other stories we're following. Abu Dhabi's sovereign fund, ADQ, has offered to take full control of Aramex in a deal that values the courier services company at about $1.2 billion. Aramex shareholders will receive 3 dirhams per share. That is around 30% higher than the last closing price on Friday. A successful deal would give ADQ control over one of the region's best-known courier services and further solidify its grip on the domestic transport and logistics sector. Bloomberg has learned the sports investment arm of Saudi's sovereign wealth fund is in advanced talks to invest at least $1 billion in streaming service DAZN, which holds the broadcasting rights of some of Europe's top-tier football leagues. Under Crown Prince Mohammed bin Salman, Saudi Arabia has been making big bets on global sports as a way to diversify its economy, soften its image, and attract tourists. Chinese officials are said to be discussing the sale of TikTok's U.S. operations to Elon Musk. That's if its Chinese owner, ByteDance, fails to fend off a ban on the short video app due to come into effect on Sunday. So let's bring in our news desk editor, Jill Deesis. So this is an interesting development. I've got to be honest, I really didn't see it going in this direction. But now there's a report suggesting that maybe ByteDance could offload TikTok to Elon Musk. What do we know?
Yeah, that's right, Jumana. I think, first of all, want to go into this just with the caveat that obviously none of this has ultimately been decided. It's not even clear really how much, honestly, TikTok or Elon Musk really know about some of these deliberations. But it does seem what we've heard is that there is some conversations in Beijing about what may ultimately be the best way that they want to deal with this prospective, TikTok ban. And it may be that maybe a sale to specifically Elon Musk's X platform, that's the platform formerly known as Twitter, maybe some way that TikTok can continue operating in the United States while also sort of like circumventing, some of these bans. This is all, of course, on the heels of, some of those Supreme Court arguments that we heard on Friday did indicate that regardless, it seems like maybe there's a possibility that this ban could go into effect. Of course, it would go into effect really next week, right before Trump is due to be inaugurated. So, yes, certainly something that at the very least Beijing seems to be deliberating at this point.
Yeah, Elon Musk continuing to build his media empire. What does it tell us about the state, actually, of U.S.-China, the U.S.-China relationship, if the Chinese government actually agreed to this sale?
Well, I think, what you'd have to look at, if you want to look at this from more of the Chinese perspective here, I mean, look at Elon Musk, richest man in the world, somebody that obviously has really incredibly close ties with the incoming Trump administration. Elon Musk spent, millions and millions of dollars to support Trump's presidential campaign last year. Obviously, that campaign was successful, and he's really sort of tied himself quite closely to the president-elect. Trump has tapped him for, this job, sort of, working on a department overseeing U.S. government efficiency. And as we've seen just over the past several weeks, Elon Musk himself has kind of weighed in on a bunch of, different, issues when it comes to politics, has kind of really ingratiated himself quite a bit with Trump. The other side of this is that Elon Musk obviously has incredibly strong ties to China. Tesla has a gigafactory in China. You've got all of these major partnerships there. Mm-hmm. We have some reporting suggesting that some within ByteDance are really, sort of keen on Musk. So you kind of see how all of these things maybe would help curry some favor with the incoming Trump administration.
That is an excellent point vis-a-vis Elon Musk and Tesla's business ties to China. So something to consider there. Jill Deesis, great to have you on, our news desk editor. Now, coming up, reports Sudan's army has recaptured a key city from the paramilitary RSF. We'll discuss whether the victory could be a turning point in the country's devastating civil war next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Sudan's army has reportedly recaptured the strategic city of Wed Madani from the paramilitary Rapid Support Services. The move could be a turning point in Sudan's devastating 2-year civil war, which has created one of the world's largest humanitarian crises. For more, let's bring in Bloomberg's Simon Marks in Nairobi, Kenya. Simon, why could this actually be a turning point in the civil war?
Hi. Well, Wad Madani is one of Sudan's largest cities, situated about 200 kilometers south of the capital. And the RSF has controlled this city since basically the end of 2023. It's a key area of the road leading to the capital. It's embedded in a highly agricultural area along the River Nile. So there's lots of food production in this area. that has sustained RSF forces. And so the army coming in and taking this city really gives them that point of leverage in a central part of the conflict. It's rallied troops. There's a sense of the army taking more and more territory in the east, in the central areas. And really now the RSF are sort of confined to some areas in the south of the country and in the Darfur area in the west. So I think this is a point of reflection for the RSF, but they do still control areas north of the city and parts of the capital. So they're far from a situation where we can say the RSF have lost the war per se. And I might just add, just yesterday, the RSF did bomb an electrical production factory, which sent large parts of the country into darkness.
Yeah. Well, all of this taking place with the backdrop of a huge humanitarian crisis, one of the largest humanitarian crises in the world right now, 30 million people in need of humanitarian aid. Just paint the complete picture for us.
Yeah, I mean, both sides in this conflict have blocked humanitarian aid from crossing lines. So that has led to millions being on the verge of starvation. We know that people have died from malnutrition and related causes. And both sides are guilty of this, quite frankly. The World Food Programme also has its own issues with reports of the malfunctioning of their team in Sudan. They are now shifting gears and trying to deliver money to communities in need, and also team up with private companies so that they can use their logistical networks to deliver food to places like the Zamzam camp, where a famine has been declared by the international community. So, yeah, as long as this war continues, people are going to continue to suffer when it comes to getting their hands on medical equipment and almost more importantly, just basic items like food.
Yeah, well, perhaps this does actually mark a turning point in this devastating civil war. Bloomberg's Simon Marks, thank you very much for bringing us that report. Well, coming up, Turkey's government bonds are becoming appealing, with further interest rate cuts expected out of the central bank. More details on why asset managers are betting on longer-term Turkish debt next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Turkey's government bonds are becoming attractive due to expectations of further interest rate cuts as inflation declines. Asset managers like 91 are betting on longer-term debt, locking in high yields for years as foreign ownership in lira bonds increases. Let's bring in Bloomberg Economics Turkey economist Sabah Bahar Baziki. Good to have you with us. When you buy long-term local debt, you're not just taking a view on duration, you're also taking a view on the currency as well. What has been the catalyst for some of these investors looking at local debt now?
Morning, Jumana. Well, the timing on the investors' interest in government bonds is actually not a coincidence. We see Turkish inflation going down to mid-20s from mid-40s currently by year-end. And as the central bank has already started its easing policy, we see the policy rate easing towards mid-20s as well from 47.5 now. Well, the timing and the size of the central bank's first move down, as well as its other acts on alternative moves, signals to us that the risks on that rates outlook is actually tilted towards further easing than what we have penciled in. So if the time is now to go into a longer debt asset, promising higher yields, I think that timing is quite opportune at the moment, as you have said. One thing to note, I think, would be that the currency side, well, we've seen the Turkish lira actually being extremely stable in the past year or so, half due to other interests coming into the country in terms of carry trade, and also the central bank's interventions, which we have estimated at north of $325 billion since the end of 2021. So with that kind of outlook, I think eliminating the currency worries that we have seen in the country prior to that, this seems like a good timing on that investment.
Yeah. What does this mean to some of the carry trades that have been popular in the front end of the curve from the international community?
I think a portion of the movement that we see into bonds could actually be shape-shifting away from the carry trade into that kind of portfolio flow. Carry trade has been quite ample earlier in the year because Turkish lira against the dollar has averaged at something like 30% return in all of last year. So carry trade has come in our calculations north of $20 billion earlier in the year. And a portion of that is definitely going to look to a longer term investment as interest rates are coming down.
Selva, does the Fed and the fact that they could be more cautious on interest rate cuts in the coming year have any implications whatsoever on the Central Bank of Turkey's decision?
Actually, yes. Traditionally, we would expect all emerging economies to watch that decision or the outlook on that Fed decision very closely. Anytime the expectations on the Fed turn a little bit more hawkish, you see EM assets and currencies taking a hit. But at the moment, the Turkish Central Bank's policy rate is at 47.5. So that small difference, the interest rate differential between what the Fed will do in terms of what we thought yesterday and what we think today, that doesn't have that much of a large impact on the Turkish lira.
Yeah. All right, Bloomberg's Selva Bahar Raziki, thank you so much for the overview. Well, stay with us. In the next hour, we'll be digging into the market outlook with Fidelity International's George Efstathopoulos, and Jennifer joins me. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. U.S. futures rally and the dollar weakens on a Bloomberg scoop that the Trump team is looking at a slow and steady approach to tariff hikes rather than going all out on day one. President-elect Donald Trump says a Gaza ceasefire deal could conclude before his inauguration next Monday. And as the clock ticks towards a TikTok ban in America, Chinese officials are said to be looking at Elon Musk as a potential buyer of the app's U.S. operations. Well, good morning again. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizon's Middle East and Africa.
Well, no shortage of news to get through today, Jen. Elon Musk once again in focus with this potential sale of TikTok to Elon Musk. So we've got to see how all of that evolves. We'll talk about that shortly. But then markets also reacting to this Bloomberg scoop that the Trump administration is considering a slow implementation of tariff hikes. So that could be interesting. Instead of going for an all-out tariff implementation on day one, they could start to introduce them gradually. So on the back of that, we've seen more positivity come up in Asian equities. S&P futures leaning towards the green as well today, up 0.3%, a better handover from Wall Street yesterday. But then the dollar is slipping slightly as well. Remember, the theme for so long has been stronger USD under a Trump administration. Today is the first day in 6 days that we're seeing a bit of a pullback in the USD. I also thought it was interesting. The CFTC data is showing that dollar longs are at their most stretched level in 6 years. So that tells you a lot about positioning as well. So something to think about vis-a-vis the USD trajectory. Brent also in focus today, slipping a little bit, down 0.6%, but again, still up 6% over the course of the last couple of days, especially since the Biden administration announced those sanctions on Russia and Russian entities. But here we are today, sort of flatlining around the $80 mark. Bitcoin also in focus, around $95,000. We pulled back 5% yesterday in trading. But I spoke about oil, and here I just want to show you that positioning. If we had spoken about oil perhaps a month ago, when crude was trading at around $70, then the overhang of positioning was quite short. Actually, what we started to see since the beginning of this year, that little uptick in January, suggests that people have started, or investors have started to buy calls over puts, i.e. they're positioning for an upside move in the price of oil versus a downside move. So people's positioning, or at least views on where oil could be headed, has changed in the last couple of weeks. Okay, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Jumana, we're seeing Asia's stock market sentiment lifted a little on that reporting that the Trump team is discussing a gradual approach to tariffs. But what markets want to see ultimately is that confirmation from the president-elect. As the reporting suggests, this hasn't yet been presented to Trump. So while it is a bit of a mood lifter, I think markets want to see a bit more in the way of confirmation, if anything. We are seeing the domestic drivers at play as well when it comes to Chinese markets outperformance, a bit of it related to valuation, but also optimism that authorities will come through with some details on potentially a stabilization fund. There is a joint presser due for later today. But I also wanted to highlight what we're seeing in Japanese stocks. The declines you're seeing on the Nikkei today, the steepest since November, on its longest losing streak since then as well. And this is a bit of catch down as markets return from a holiday, but chip stocks are the drag today. And this comes after the White House unveiled these fresh curbs for NVIDIA's AI chip exports. Think about as well how next week the BOJ meeting is coming just days after Trump's return to the White House. So there's that bit of caution as well. Japanese stocks underperforming today. Jumana.
Yeah, Avril Hong in Singapore. Thank you very much for that update. Well, U.S. President-elect Donald Trump says he believes negotiators could conclude a Gaza ceasefire deal before his inauguration next Monday. Israeli officials say the first phase of the deal would see Hamas release 33 hostages, including the remains of those who have died in captivity. For more on this, Honor Ant, Bloomberg's managing editor for Middle East and North Africa, joins me right now. So what do we know about the contours of this potential ceasefire deal and how it may be different from that original ceasefire proposal that Biden put forth last May?
I think the bottom line that we need to know about this deal is that it is more likely to take place than any other attempts that took place since the first comprehensive truce plan unveiled by Biden administration in May last year, Jumana. That's the bottom line. What exactly are the details compared to previous variations of the same truce plan? Those details are being closely kept, held. However, the main sticking points were, and have until recently remained, the future of Israeli the troop deployments in Gaza and what happens to civilians in Gaza, especially whether or not they would be allowed north of the enclave. Those details seem to have been ironed out, or the differences between the two sides on those details seem to have been ironed out, partly with several U.S. guarantees, basically securing the future of whatever the arrangement is in Gaza. But what exactly the details are, they remain unknown, but they will probably be publicly available once this deal is closed and announced, likely before Trump takes over as the next U.S. president following Monday.
Yeah. Honor, why has there been such a big push to get this done before Trump steps into office next Monday, before his inauguration? Why is the clock ticking, so to speak?
Well, I think there are two reasons. One, probably the lesser reason, is the fact that Biden administration and the Secretary of State, Blinken, who've been working very hard to get a deal done, want to do something, want to achieve something that they can basically showcase by the time they leave office. So that's one push by the U.S. Biden administration. The second one is the fact that U.S. President-elect Trump actually came out and made a somewhat cryptic promise to really fix things his own way if things aren't, or if the deal isn't clinched by the time he takes office. He said there will be all hell to pay. And no one quite knew what that meant. And it turns out that nobody wanted to find out what that quite would mean. And hence the big push for a ceasefire by then.
Yeah. Yeah, and probably he himself doesn't even know what he plans to do to follow through on what he said on that statement. So, Honor, thank you very much for the reporting. We'll watch out for the latest developments there. Honor Ant, Bloomberg's managing editor for Middle East and North Africa.
Now, Bloomberg has learned that Donald Trump's economic team is discussing a gradual approach to tariffs to boost negotiating leverage and avoid a spike in inflation. Meanwhile, Canada's ambassador to the U.S. is warning that levies will lead to retaliation and leave both nations vulnerable to adversaries like China.
Be other ways in which to fill those needs, but they will be more expensive, less reliable, and they will lead, as I say, to a bit of a tit for tat, when really what we should be doing is working together, especially right now. I mean, right now we're facing quite a generational challenge from adversaries and competitors, China and Russia.
Now for more, let's bring in Bill Ferries, our senior editor. So, Bill, since President-elect Trump has been elected to be the next president, we've heard a number of reports about the severity of what tariffs could look like. What do we know, though, about the incoming administration and where they stand on tariff policy?
Yeah, we have heard, as you said, a wide range. The president has said that he would put a 10% flat tariff across the board on all imports, and up to 60% perhaps of tariffs on Chinese imports. What their latest reporting shows is that some members of Donald Trump's economic team are discussing what could really happen after he takes office on January 20th. One of those possibilities that they're discussing is that you start at a very low level and have tariffs incrementally increase 2% up to 5% a month. As a way of increasing leverage, increasing pressure on foreign partners to enact different trade policies, to enact all kinds of different policies that the Trump administration would see as more favorable. This seems to be one of those options. Our reporting shows that this is being discussed among some of his key aides, but is not something that's been formally presented to the president-elect so far.
So then, Bill, we don't know really where Trump stands on this. I mean, what do we know about his insight into this?
Well, we do know there was an earlier report in the Washington Post saying that instead of across-the-board tariffs, that the incoming administration would put tariffs on select products, select industries, perhaps starting on day one. President-elect Trump said that that was not true. He announced that he rejected that report in the Post. What is clear, I think, from this, our story and our sourcing is that there are a lot of discussions going on about how to both carry out what the president promised during his campaign, which was more tariffs, but how to implement that without sort of stoking inflation and causing some other economic problems. In the end, the Trump campaign official spokespeople always say that what really matters is what Donald Trump decides after he's in office. These are, again, discussions that are taking place a little bit lower, but it does give you some insight into the thinking of his key aides on this issue.
And certainly we'll hear from him in due time, I suppose. Bill Ferries, thanks, Bill, for joining us this morning. And sticking on Trump, Greenland's prime minister reportedly says he wants closer ties with the U.S., highlighting the Arctic island's push for independence. His comments to a local broadcaster come after Donald Trump repeated his ambition to take control of the self-ruling territory of Denmark, home to 57,000 people. House Republicans, meanwhile, have introduced a bill to begin negotiations called the Make Greenland Great Again Act. Now, coming up, we discuss market strategies and asset allocation with Fidelity International next. Stick with us. This is Bloomberg. Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Asian stocks and U.S. futures rallied while the dollar weakened after Bloomberg revealed the Trump team is said to be discussing a gradual approach to ramping up tariffs to avoid an inflation spike. Now, joining us is George Efstathopoulos, portfolio manager at Fidelity International. George, great to get you on. So the last time you were on the show, you talked to us about how whichever party in the U.S. ended up winning and they pushed forward with tariffs, it's going to leave a lot of other FX currencies globally vulnerable. What do you say now, especially considering we have so many conflicting reports about what tariffs will actually look like?
Sure, yeah. And first of all, thanks for having me on the show, Jennifer. So this is exactly what has happened the past almost 2 months since the elections in the US. We have seen a very strong dollar, and you have seen currencies across the board, whether it's DMs or whether it's EMs, have been a lot weaker. So that's definitely been playing out. And there's two reasons for that. The first one is US exceptionalism, whether you look at economic surprise in the US, whether you look at the labor market with the most recent NFP print that we had. But also, that's one of the reasons, or one of the two key reasons, US exceptionalism versus the rest of the world. And the other one, of course, is the ongoing uncertainty and fears around what this could mean around trade, around tariffs. And that's clearly been pushing treasury yields upwards, and that typically tends to be sort of a boost for the dollar and clearly sort of weakness for all other currencies.
But, George, we are seeing a slight pullback in the dollar since that report came out on Monday. Do you believe that there is more that the dollar has to fall until Trump takes office?
I guess by that report, do you mean sort of the gradual, sort of the step change in
yeah,
tariffs?
The gradual tariffs.
The focus? Right. Yeah, so it's interesting, kind of. I guess the markets overnight had interpreted this as positive news, and I guess one can see why, because when you say 2%, it's very, very different to 20%. There's a big gap between the two, so that could be perceived as less hawkish on tariffs. But first of all, it's just sort of for the time being, it's nothing that's been confirmed. So we have to sort of take a step back and be mindful of that. Then we have to ask, what is the motivation behind this? Why would sort of the Republicans want to go down that path? And I imagine the key reason would be concerns around what this could mean on inflation, and which has in turn been driving rates up across the curve. So I assume that is the motivation. Now, whether this is positive or negatives, again, the initial reaction is one of weaker dollar and one of good news for equity markets, especially here in Asia. But we also have to start thinking, what else could this be, sort of beyond sort of the initial reaction? Because on the one hand, you could argue 2 is much better than 20, but on the other hand, it leads to potential future uncertainty. Markets don't like uncertainty. And it could even lead to further de-anchoring of inflation expectations in the US, which clearly would not be a good thing. So I think there's pros and cons, and I think it's very difficult to gauge exactly what could that mean for the time being.
What could that mean then, George, for picking assets? I mean, how are you determining where to put your weight in? You mentioned Asia. Is that really where you're focused right now?
So in Asia, what do we like in Asia? So one of the areas that we do like in Asia is Japan, and a specific focus on Japan mid-caps. Now, why mid-caps? Because in Japan, we are seeing a huge shift in consumption behaviors, because for the first time in 20, 30 years, we are seeing broad-based wage inflation, broad-based services inflation, and that's leading to decent sort of growth, domestic growth in Japan, with more sort of further upside surprises on that front. We've had the politics, that's been a bit of a problem sort of towards the end of last year, but we've got a little bit more stability, and that stability is also leading to a bit more fiscal stimulus. Again, that's good news for domestic consumption. And the mid-caps are a lot more immune to what happens on the currency, less sensitive to changes in the currency, and instead they're a lot more focused on the domestic picture, domestic earnings, and they offer attractive valuations. And not only that, Japan has been, for the large caps, we've had for the past couple of years, has been a story of reforms, buybacks, increase in dividends, a lot of reforms. We're now seeing a lot of these reforms also extend to the mid cap. So quite a nice story across across Japan when it comes to the mid-caps.
Finally, George, do you share that sentiment, though, for other EMs? We've been talking about how a number of investors are really pulling back their exposure for EMs. Are there other markets that you're looking to?
One of the areas we've been turning a bit more constructive on is places like Indonesia, for instance. Now, if you think of 2024, what were the two worst performing EM markets, especially in Asia? And these were places like, Korea was one of the weaker markets in Asia, and Indonesia. So from a valuations perspective, a lot is in the price. Now, why turn more constructive? First of all, again, because we've seen a big correction. We've got a lot more political stability with the potential to see a bit more fiscal stimulus in that space. We've seen the banks, as a reminder, kind of for Indonesia, it's a bank-heavy equity market, and the banks have been lending more and more. So we're seeing fundamentals improve in that space. And Indonesia has a very big domestic economy. And this is exactly what you want to be focusing on at a time when there's a lot of trade uncertainty globally.
George Efstathopoulos, Portfolio Manager at Fidelity International. Great to get your insights on this morning. Thanks so much for joining us, George. Please come back. Now, for a look at some of the other stories we're following this morning, Bloomberg understands that Citadel, the hedge fund manager founded by Ken Griffin, is looking to raise at least $500 million through a corporate bond sale. The offering may include notes with maturities in the range of 5 to 10 years. Citadel, which manages about $65 billion of investment capital, is rated BBB by S&P, 8 steps below the highest investment grade rating. Morgan Stanley has named longtime executive Mandel Crawley to run a new unit combining client coverage, strategy, and marketing. Bloomberg understands Crawley, a 32-year veteran of the firm and one of its senior-most black executives, will run the integrated firm management organization as chief client officer. This, as chief executive officer, Ted Pick continues to set his priorities 1 year into his tenure. Now, coming up, Chinese officials are said to be discussing the sale of TikTok to Elon Musk in an effort to fend off a controversial ban of the short video app. Details on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Chinese officials are said to be discussing the sale of TikTok's U.S. operations to Elon Musk. That's if its Chinese owner, ByteDance, fails to fend off a ban on the short video app due to come into effect on Sunday. Let's bring in our tech reporter, Annabelle Drewlers, for more. Annabelle, I've got to say this is one of my favorite stories of the day because it was not expected. And again, Elon Musk seems to be front and center of all of these stories around media. But what do we know about this potential news that China are considering a sale of TikTok, or ByteDance at least are considering a sale of TikTok to Elon Musk?
Yeah, I mean, to your point, I mean, it's really difficult to understand what exactly is going to be on people's bingo cards for 2025. But maybe Elon Musk acquiring TikTok in the U.S. wasn't one of those. But this is a Bloomberg scoop that we had out this morning. And I want to just get started by saying that this is, again, according to our sources. But these are discussions that are happening at the Chinese government level. So what we're understanding is that Chinese government officials are looking at basically what are the sort of scenarios, because we're coming up against that deadline. June or January 19 rather is when the app was supposed to be divested. From then on, it does appear like it could be going dark in the US, so people won't be able to download it. They won't be able to access any sort of updates to the platform either. And so the Chinese government is thinking, okay, well, what's next? And one of those possible scenarios could be X through Elon Musk, but acquiring TikTok in the US and then sort of, thinking about what it's in it for X. Well, they could get better advertising revenue, and they could also, the AI platform XAI could also take advantage of the huge amount of content that's being created. So this is one of the possibilities, but again, what's important to note, this isn't really what the Chinese government exactly wants to see. There's still the preference is for ByteDance to continue to retain TikTok in the US.
Yeah. How far along does this go in terms of allaying concerns around national security? Because that was the main sort of case brought in front of the Supreme Court. There were serious national security concerns. Today, I'm reading that a pair of other Chinese-made social apps have been the most downloaded apps on iPhone, on the iPhone app service. And so it tells you that these users are going to go to whatever media app is available, even if it's still owned by China.
Well, that's it. I mean, we were sort of thinking maybe Meta would be the big winner out of this with Instagram and with Facebook. But actually, to your point, where we're seeing users really going so far in terms of what's being downloaded on the Apple iPhone App Store is to the likes of Xiaohongshu that you're seeing here. That's known as Red Note, also Lemonade, that's owned by ByteDance. These are some of the primary beneficiaries, it seems, so far. And that has been sort of one of the really interesting dynamics. But ByteDance, for its part as well, we do need to emphasize that it possibly hasn't even been involved in these discussions with the Beijing government. It's just how Beijing is looking at exactly what could be next for TikTok in the US.
So interesting. Asia tech reporter Annabelle Jewelers, thank you for the report. So coming up, we're going to be talking more about oil. Stay with us.
This is Horizons Middle East and Africa, our top stories this morning. U.S. futures rally and the dollar weakens on a Bloomberg scoop that the Trump team is looking at a slow and steady approach to tariff hikes rather than going all out on day one. President-elect Donald Trump says a Gaza ceasefire deal could conclude before his inauguration next Monday. And as the clock ticks towards a TikTok ban in America, Chinese officials are said to be looking at Elon Musk as a potential buyer of the app's U.S. operations. It's just gone at past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jemana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. And Jen, it feels as though the headlines that we just spoke about now are going to be a mirror image of what happens through the rest of 2025. It's all about Donald Trump and Elon Musk, the only people that seem to matter right now.
I know, and keeping the markets on their toes, Jumana. Clearly, we've seen that, and we're only about 14 days into the new year, but we'll see how that transpires, especially over the next few days. Let's take a look, though, at where markets are positioned ahead of the trading day. We are seeing U.S. futures extending the slight gains that we did see on Monday. We're seeing S&P futures up just about 0.3% there. We did see stocks, though, mixed on Monday, with the S&P actually briefly dipping below a level that it ended just before Trump was elected president. It erased some of those losses, though, to close in the green. We did see the NASDAQ, though, falling. Emerging market assets, as I typically am, I'm paying attention to them. Actually seeing a bit of green right now, but on Monday was still a bit of a sour note for EM assets. We're still seeing persistent inflation concerns, fiscal debt, and also those scaled back Fed rate cut expectations really weighing down MSCI EM assets, though, as I said, up slightly just to start the day. Brent crude, though, down more than 0.5%, giving up some of those early gains that we did see in the session. And from oil to the dollar, we're seeing the dollar trading in the red for the first day in 6. That comes after that report that we were talking about earlier about Trump tariffs potentially being more gradual and ahead of the U.S. CPI print that we'll get on Wednesday. But still, despite the pullback, it's still 0.6% higher this year. And some analysts are seeing more strength. And that brings me to this terminal chart, because we are hearing from Goldman, in fact, saying that they are upgrading all of their dollar forecasts, including against the euro, which it now sees trading below parity with the greenback in 6 months. So we are on watch to see that parity between those two currencies as we continue to move through 2025. Let's check in, though, on Asian currencies. Avril Hong is standing by in our Singapore studio with more on that. Avril, what are you watching?
Well, Jen, as we see the dollar strength after a string of gains taking a bit of a step back, that's proving to be helpful for Asia currencies. But, of course, this is against the backdrop of that reporting about the Trump team taking a gradual approach, discussing potentially that approach to tariffs. A couple of caveats here in that, this still needs confirmation from the president-elect. We haven't heard that yet. And another element to consider, we already have the likes of UBS saying that a gradual approach to enacting tariffs would actually be problematic for the Federal Reserve because it's tantamount to a series of supply shocks which could eventually lead to higher peak inflation. One thing seems clearer, though, is that this FX volatility that we're seeing, something that we have to get used to under the Trump administration. Highlighting what we're seeing in the yen as well, we're seeing a bit of weakness today. The BOJ Deputy Governor Himino spoke, and it was seen as sort of the last chance for the BOJ to telegraph to markets that they're going to be hiking or serious about tightening next week. Suddenly, he just reiterated what his governor said last month, and against that backdrop, markets don't seem terribly convinced. Guys?
Thanks so much. Avril Hong in Singapore for us.
Well, oil is hovering near a 5-month high after rallying on global supply risks. That's after the U.S. imposed stricter sanctions against Russian flows and as investors weigh potential trade tariffs from the incoming Trump administration. Brent crude has surged more than 5% over the previous 2 sessions alone. Joining me for more is Ziad Dawood, Chief Emerging Markets Economist at Bloomberg Economics. We've missed you. We know you've been away teaching a course at Harvard, so it's good to have you back here again, Ziad, to talk us through everything economics related. But today I want to ask you about oil. About a month ago, oil was sitting at around $70, and I just kept reading analyst commentary after commentary suggesting more downside pressure to come on the oil complex. Some people were saying $50 was in the horizon. And here we are. We spiked 6% in the last couple of days, sitting at around $80. Do you think higher oil prices or oil prices around here is what's going to be with us in the foreseeable future?
Good morning, Jemima, and it's great to be back, especially with you. I think you're right. I think the narrative changed on Friday. I think in recent weeks, as you've mentioned, the narrative was oil prices are going to decline compared to last year. Last year, they averaged $80 per barrel. The futures market was looking at somewhere between 70 and 75, and some forecasters were expecting something to 60s and even the 50s. The narrative was the market was going to be oversupplied, and the narrative was that OPEC Plus has lost control of the oil market, and I think that has changed. That has changed in the sense that you have these sweeping U.S. sanctions on Russia that could impact supply. You have the incoming Trump administration, which could impose maximum pressure on Iran and reduce Iranian oil output further. And if you get a scenario in which you have significant reductions from these two countries, then the overhang in the oil market might disappear as a result of
Well,
these.
it sounds to me like the Trump administration is doing the OPEC Plus group a solid here. What they've been trying to do is boost prices by taking barrels off the market. And it's been successful at supporting prices, so to speak, at around $70. But to get to 80, that only happened with the externality of the Trump administration and Biden administration sanctions.
Yes, so a lot of OPEC members have needs for high oil prices. If you think about, for example, Saudi, one of the biggest 2 OPEC Plus members, its reliance on oil has never been stronger. So it needs oil at near $100 per barrel to balance its budget, and it needs oil at $80 per barrel to fund its imports and outward remittances. Both of these numbers are higher than anything that we've seen, at least in the last decade. So yes, higher oil prices, that's coming through supply cuts that you don't have to agree within OPEC Plus and you have compliance within the members, does help some of these countries for sure.
Yeah, and people said that the level in the sand that the Saudi energy minister looks for, I mean, he'll never say it out loud, is around $80 for oil to be around 80. I thought it was really interesting. Yesterday, our colleague Javier Blas put out a Bloomberg opinion piece suggesting that U.S. imports of Saudi crude are at a multi-decade low now because they've become a lot more self-reliant, self-dependent because of the shale industry and also the rise in the Canadian oil industry as well. What does that mean for Saudi Arabia's influence on global oil markets if the U.S. are more independent now?
It's still influential. So Saudi produces now about 9 million barrels per day. It has capacity of 12 million barrels per day. In an oil market that consumes 100 million barrels, that's 9 to 12%. So it's still influential whether the oil is going to the U.S. or going to Asia. This stuff matters. I think where it has an influence is on the geopolitics of the region. One of the strategic sort of targets for the U.S. in the region was the continuous flow of oil. And if the U.S. becomes more self-dependent, then basically that reinforces what's always wanted to do, which is to pivot from the Middle East to Asia and face off with the rising power of China.
Yeah, so interesting. Ziad, always great to chat to you, and thanks for coming on our show. Ziad Dawood, Chief Emerging Markets Economist at Bloomberg Economics.
Now, the world is bracing for a fight for natural gas supplies this year, prolonging the pain of higher bills for consumers and factories in energy-hungry Europe. The battle also puts poorer emerging countries from Asia to South America at risk of getting priced out of the market. Let's bring in Bloomberg's Stephen Stupczynski in Singapore for us. So, Stephen, can you paint the picture for us? And really, what is the expectation for when this will all come to a head?
You know, Europe is in a very difficult spot because over the last 2 or 3 years, they've lost a lot of Russian gas via pipeline supply. Immediately after the war in Ukraine began, they lost the Nord Stream pipeline a few months later. And then just recently, the pipes that flow gas through Ukraine also halted due to a disagreement between Ukraine and Russia about extending a pact. Now, that leaves Europe with fewer and fewer options to get their gas. Now, that's important because gas inventories are falling in winter. They're not going to run out of gas, but gas inventories are below average, and they're continuing to drain as cold weather increases the need for heating and electricity. Then, when March comes and winter ends, there's going to begin the period of increasing inventories and restocking. And that's the problem because they don't have very many options. The best option is liquefied natural gas. It's a seaborne fuel, and they compete with to buy LNG from the U.S. and other places with Asia and South America. Now, that risks if there is a heat wave in Asia or more demand in South America, which is traditionally higher demand period during the southern hemisphere winter, that could increase global demand for LNG, increasing the price and causing a fight for fuel. Now, we're not seeing that right now, but during the restocking period in the northern hemisphere summer, you could see a rise in prices as Europe is having to fight with these other nations and outbid them for these shipments of LNG.
Stephen, does Trump coming into office sort of change the market outlook, or what, if anything, does it do to what you just said?
You know, I think in the short term, Trump coming into the office doesn't really change the LNG scenario. The U.S. is the world's biggest LNG exporter, yes. And Trump is very pro-LNG, yes. But there's not much that the LNG can ship, that much more the U.S. can ship now that our president would have any impact over. So in the immediate term, you're unlikely to see any sort of impact over the White House on LNG. What you could see is something maybe a little bit longer down the road. Trump has been pushing for countries to reduce the trade deficit with the United States. And there are many proposed LNG projects that need long-term buyers. So potentially, for example, a European country could come and try to appease Trump and say, hey, we're going to buy LNG from this proposed project for a decade or more than a decade to say that we're supporting U.S. energy. Now, that project's not going to come online this year or next year, but it could come online in 2028, 2029, or onward. So Trump coming into office might affect the LNG supply out of the United States at the end of the decade and into the early 2030s because he's removing regulations and a de facto ban that Biden put on new approvals, as well as pushing for countries to buy more fuel. And the fuel that is available isn't what's being exported today, it's what's being exported potentially at the end of the decade.
Fascinating. Stephen Stupczynski in Singapore. Thanks so much, Stephen, as always, for joining us.
Now for a look at some of the other stories we're following. Bloomberg has learned the sports investment arm of Saudi's sovereign wealth fund is in advanced talks to invest at least $1 billion in streaming service DAZN, which holds the broadcasting rights of some of Europe's top-tier football leagues. Under Crown Prince Mohammed bin Salman, Saudi Arabia has been making big bets on global sports as a way to diversify its economy, soften its image, and attract tourists. Bloomberg has learned that Saudi lender Riyadh Bank is working with JP Morgan on a potential IPO of its investment banking arm. Our sources say Riyadh Capital could sell shares to the public as early as the middle of this year at a valuation of around $2.5 billion. One of the world's largest operators of private schools is opening a new $100 million campus in Dubai, where annual fees could reach as high as $56,000. GEMS Education's new 48,000 square meter campus will feature a 600-seat auditorium, an Olympic-sized pool, and a football field that doubles as a helipad. Well, that will be great for some. All right, coming up, reports that Sudan's army has recaptured a key city from the paramilitary RSF. We will discuss the impact next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Sudan's army has reportedly recaptured the strategic city of Wad Madani from the paramilitary Rapid Support Services. The move could be a turning point in Sudan's devastating two-year civil war, which has created one of the world's largest humanitarian crises. For more, let's bring in Bloomberg's Simon Marks, who's joining us in Nairobi, Kenya, for more. So, Simon, why could this now be a turning point in the war? You've been following this closely for quite some time.
Yeah, I mean, Wad Madani is one of the biggest cities in Sudan. It's situated just south of the capital, 100 kilometers south, and it's embedded really in a very agricultural, productive area on the River Nile. So this has allowed the Rapid Support Forces to regroup, to supply their forces, to feed their soldiers. And it's also the main road coming from the Kordofan regions in the south of the country to the capital. So it's a really strategic cross point for the paramilitary groups. So the fact they've lost it has now pushed them north towards the capital. It's a big breakthrough for the army. It doesn't necessarily mean, you know, they're going to win this war in the next couple of days or anything. But it's definitely another example of this army's, the Sudanese armed forces offensive that's been going on since about October to retake more and more territory from the RSF, who are admittedly on the back foot at the moment.
And Simon, when we talk about the humanitarian situation, a number of agencies have weighed into just how severe this is. How would you assess the extent of it right now?
Well, it's still dire in the country. You know, both parties to the war have prevented humanitarian access for food, medical supplies. It's been very tough for UN agencies to get stuff through, and there's been a lot of dysfunction there. Groups like the World Food Programme have now shifted that they've actually partnered with private sector companies and using their logistical networks to get food to areas where there's a risk of famine or even where a famine has been declared. But there's millions still on the verge of famine. There's still millions displaced. There's some hope. Some might be able to return to their homes in Wad Madani as a result of that city falling to the army. But it's still high risk, and the conflict could merely just shift north and displace more people. So it's constantly evolving, and essentially the international community is on the back foot, negotiating access, trying to get humanitarian workers in, having visas denied often. So there's a long way to go, really, before Sudan gets any respite from this conflict.
Yeah, a lot to watch very closely there. Bloomberg, Simon Marks in Nairobi for us. Simon, thanks as always for joining us. Now, here's a look at some other stories we're following from across the region. An operation to rescue illegal gold miners stranded in deep underground shafts in South Africa's northwest province got underway yesterday, ending a months-long standoff over their fate. Civil rights groups say at least 100 people have died from starvation since October, when the authorities sealed off shafts at the gold mine. Some estimates suggest a further 1,000 people remain underground. Bloomberg has learned that Mali's military junta has started executing an interim order to seize gold at a mine run by Barrick Gold, escalating a dispute over the government's share of revenues from the project. The world's #2 gold producer has been locked in a dispute with the Malian government, with shipments from the mine blocked since November. Other large producers in Mali have announced settlements that involve payments to the state and higher royalty rates. And finally, the window of opportunity for Benin to offer $750 million of bonds is narrowing as yields approach levels that 3 years ago forced African borrowers to put their financing plans on hold. According to the Standard Bank Africa Sovereign Yield Index, the average yield on African sovereign dollar bonds has risen by 55 basis points since reaching a more than 2-year low in early December. Similar conditions in 2022 led African nations to stop tapping the Eurobond market for financing. Now, coming up, expectations for further interest rate cuts in Turkey are making the country's government bonds into winners. More details on why asset managers are betting on longer-term debt next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Turkey's government bonds are becoming attractive due to expectations of further interest rate cuts as inflation declines. Asset managers like 91 are betting on longer-term debt, locking in higher yields as foreign ownership in lira bonds increases. Let's bring in Bloomberg Economics Turkey economist Selva Bahar Baziki. Selva, we have started to see quite the rally in some of these local bonds, especially in long duration. How much of this is in reaction to the Central Bank of Turkey finally beginning with the rate-cutting cycle back in December?
Morning, Jumana. We think that the timing is actually quite related to what the central bank is doing. We just had a 250 basis point first cut in the cycle in December, and the outlook is to see inflation receding from mid-40s now to mid-20s in the end of the year. That will open up room for further easing from the central bank, which we think is going to take the policy rate to 25% by year end from 47.5% currently. I should also add that the timing and the size of the central bank's first move and its other actions through alternative tools signals that the policymakers may be paying a lot of attention to non-inflationary concerns such as growth. Turkey is in a technical recession at the moment, and employment, as well as the political ask for lower rates going forward.
Yeah. What sort of knock-on effect do you think a more hawkish Fed will have on the Central Bank of Turkey's decision-making this year?
Normally, it would have a large potential for impact. You would expect emerging economies to be the first ones to take the hit whenever the expectations on the Fed turn a little bit more hawkish. And we just saw that actually happening in a lot of the EM assets as well as currencies. But in this particular case, I'm going to argue that it doesn't actually have as much an effect as one would expect because the interest rate differential is already so high. We are at 47.5 in Turkey. So the small change in the expectation in the Fed is going to matter very little in terms of the interest rate differential and the expectation on return here.
What does this mean for some of the carry trades that investors have been doing in the front end of the curve?
Actually, a lot of the movement that we see going into bonds could be a shift in that kind of investment going away from carry trade into that portfolio. We had estimated at the height of when the flows were coming in, as much as $20 billion were coming into the country in terms of carry trade. That's a very short-term investment. So with expectations of the central bank easing quite strong going ahead, it's natural that some of that short-term investment would switch to longer-term bonds that offer quite high yields into the future.
Yeah. So interesting. Bloomberg's Selva Bahar Baziki, thank you so much for the reporting there.
As you can see, a bit of green, a lot of green actually on the screen. We're seeing U.S. futures ticking slightly higher, extending some of those gains that we did see on Monday, those slight gains, although we are waiting for PPI coming out of the U.S. And, of course, awaiting more reaction from what we get ahead of Trump being inaugurated. That's Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg with Jumana Bersechi in Dubai.